Nick Fulton, Tally Mac, yeah.
Yeah.
What's up, everybody?
Tally.
How's it going?
Hey.
Hi.
Make sure my keeps getting on. Cool. What's up, guys?
Hey, man.
Hey, Rachel, what's up?
Oh my gosh, I am all about right
All about what?
now. So,
You liked it? You liked it? Awesome. Cool. Very, very cool. Very, very cool.
Push. Doing great. What can I do for you?
We're going to give it a couple minutes. Guys, if you have customers or something like that, just mute it. We don't have to hear you. I don't know who's playing music. Mute you. Scott Nell. Eric, what's up, brother?
Hey, good morning or good afternoon. I don't know what time
Awesome.
it's been right now. Something.
Hey, Jeannie.
Awesome. Eric, we're going to check in with everybody, then I'll get you to do your thing so that you can jet out because I know you're a busy guy.
No.
Come on. Can you give it like another minute for people to jump on?
Yeah.
Todd Ingram, what's up, man?
I'm here. Hey.
Todd called me out on the live the other day. That was awesome. Thank you. Jared McBride. Brian, you look so sexy in the magazine, my friend.
Oh shit, where did he go? What did he go? Anyway,
It's still not like the cover like you though, right?
Look at that. Next time.
Walmart? I see the Walmart.
All right, let me mute some people. Alan Nelson there. What's up, Brian Smith, Jeff Wilhelm, Dave, welcome. Scott Nell. Cool. Awesome, guys. All right, so it's 12 o'clock. We start on time here at Pawn Leaders. Thank you so much for being on the community call. We have John Hopkins. What's up, man? Thanks for joining us. We have an amazing guest today, Eric, who was on the podcast. If you listened to that one, he was on there. We have some more people jumping in. Bernadette, Scott Nell, cool. So I'm going to let Eric, if you don't follow him on Facebook, he's been going live almost every single day, giving so much value to entrepreneurs about what's happening today, about the SBA loans and the PPP and the disaster relief. And I said, Eric, do me a solid, brother, and come on so that you can actually give the pawn industry and let them know what's really happening as opposed to just hearsay. So I'm going to spotlight Eric's video. Give me 1 second, Eric. Let me spotlight your video. All right, everybody see Eric in big?
Yep.
Cool, awesome. So and I'm also going to mute everybody except for Eric. Eric, thank you so much for being here, brother. I introduced you on the podcast, but give us a brief introduction about yourself. Give me 1 second. Let me just mute everybody, then I'll unmute you. Hold on. Give me 1 second. Cool. Can you hear me, Eric?
Gotcha.
Cool, man. So give them a quick introduction about you, and then we'll dive into the information, and then we'll get to Q&As afterward.
Yeah, how's it going, everybody? My name is Eric Neum. I'm out of Orange County, California. I've been an entrepreneur for a long time, and I see a lot of like white hair in there. I know I'm an Asian guy, so I look young, but I've been in business for over 25 years now. I've been through 2 recessions, and I know many of you can relate because I see some older faces in here. I've been through the 2001 recession, the 2008 recession, both running businesses during those timeframes, understand the struggle of it. My main business is in a focus of tax strategy, federal tax strategy, and also as a fractional CFO for a number of companies. So that's what my business is. And I had to pivot very quickly in the last couple of weeks because a lot of clients have been reaching out to me with challenges when it comes to funding and keeping their business afloat. And everyone is concerned about like what's going to happen with the recession and what's going to happen with the market. And it allowed me to start moving in a direction to help clients out. And as you all knows, like I'm a big service type of person where I'm all about like trying to provide knowledge, trying to provide value, and try to help out the community. And if that results in business down the road, awesome. If not, like I'm just putting my bank deposits in my my good deeds account to try to just share the message of what's out there. So as many of you know, we're in a unprecedented economic time. 2001, we had 9/11 where an airplane flew into the Twin Towers, caused an economic recession for a little bit, but that was isolated to one country, one location, to very specific industry, travel. airline industries. 2008, we had another recession where the banks basically realized that they weren't being responsible to how they were lending out, and it caused the banks to collapse. But that challenge was isolated relatively to the finance industry. We're dealing with what we call a black swan event. And because I perceive it to be bigger than a black swan, a white rhino event, where this is something that's affecting the entire country, affecting other countries around the world, but it's not just affecting one specific industry, it's affecting industries all across the map. Because 2001, 2008, you're still going to restaurants, you're still eating, you're going to the movies, you're still going to the stores and still buying stuff. This is a unique situation, unique time. And so as we know, the federal government sees this huge spike in unemployment. It went from 282,000 on a normal basis. It went to 3 million first-time unemployment applications last week, and this week it's up to 8 million. So the federal government's like, okay, crap, we need to stop this bleeding. Think of it like a big bullet hole. How do we plug up this bullet hole and prevent more unemployment from happening? How do we keep businesses afloat? And how do we basically allow the economy to keep running? And right now, to be honest, like all these programs are really just a cotton ball being stuffed in a big old bullet hole. But I wanted to share the 2 programs that the SBA has rolled out that I've been strongly sharing across all social media platforms for the last 2 weeks. Like my big mission right now is to try to educate as many entrepreneurs and business owners like you and I about these great programs that are out there, so that way we are in a good position financially to weather the storm. Now, whether or not you need or you may want to apply for one of these products, it's really important for us to understand what they are. And from my past experience in being in the 2001 and 2008 recession, anything that you can do as a business owner to be in a stronger financial position will help you weather the storm, because you're going to see a lot of your competitors closing down over these next couple of months because they're either highly leveraged or they're underfunded or they're just like living sale to sale to sale. So we're going to be facing an interesting time of consolidation of industry, and the stronger you can be, the stronger you'll be coming out of it. So let's talk about the 2 different programs that the SBA released. The first one is called the EIDL, or the Economic Injury Disaster Loan. I just realized this is mirrored backwards, so I'm just going to explain it in person. So the EIDL loan is something that was rolled out.
It actually looks good, brother, so you're good.
Oh, really? Oh, that's amazing. Okay. So the EIDL loan is called the Economic Injury Disaster Loan. What this loan allows you to do is borrow up to $2 million from the federal government, and it's designed to be like a short-term bridge note to help you cover your expenses for 2 to 4 months of operations expenses. It's not designed for scaling. It's not designed for advertising. It's not designed for buying other businesses. It's designed to help you operate. It's done at a 10 or 15-year note over 3.75%. So it's a low interest rate. And what's really unique about it, and you guys and gals can all relate being in effectively the lending industry, is what's unique about it. It's non-collateralized and it's non-recourse. Now, if any of you have applied for an SBA loan in the past, they're usually collateralized and they usually are recourse loans. So that's super unique. What's really interesting too is they've streamlined the underwriting process to try to get this money out there in the marketplace. And again, it's designed for your overhead costs, like your rent, your payroll, utilities, and things like that. So that's what it's designed for. And what's interesting about it, this loan program, is when you apply, whether you get approved or denied, as long as you're a qualified business, there's a $10,000 grant. Now, the economist in me, because I studied economics when I was younger, the economist in me is like, okay, this magic helicopter money coming from the sky is probably going to lead to dramatic inflation or an increase in taxes down the road. And I get that as the economist, but the entrepreneur in me knows that eventually we're all going to pay for it as taxpayers down the road. So I highly recommend to take advantage of these programs that are available, because if you don't, you're going to pay for it anyway. Right, so it's a $10,000 grant that comes out regardless if you get approved or denied for this program, which is super unique. It's like, again, magical helicopter money. So what are the qualification processes to be able to participate in this program? You have to have a business that has revenue prior to January 31st of 2020. And I know you all deals with amazing entrepreneurs like yourselves, so I all see that you all have probably been in business prior to January 31st of this year. The second thing is you have to have normal operating expenses that you're going to be loaning and borrowing based off. You have to be current with your accounting and your tax related filing. And here's the one industry specific caveat that may be a challenge for some of the folks on this call and may not be a challenge for other folks on the call. The SBA, it will lend and approve for any pawn related businesses as long as your income is less than 50% driven by interest. So that can be a challenge for some of the folks out there, and I wanted to be clear on that. There's a couple of other restrictions when it comes to applying for this, but it doesn't relate directly to the pawn industry. Things like you can't be in the marijuana space because it's not federally legal. You can't be in the in Nevada, right there. They have legalized sex trade in Nevada. You can't do it because it's not federally legal, for example. You can't be a gambling facility because it's not federally chartered, right? So things like that aren't going to be approved for these SBA programs, but specifically for the pawn industry, as long as your income is less than 50% derived from interest, then you'll be able to apply for one of these programs. So that's something to keep an eye out for and to know. So that's the EIDL loan. It's a quick process. You can fill out a form online, it takes 4 pages, but understand that there's some back-end work that you want to have ready when the SBA loan officer calls you up. When the SBA loan officer calls you up in 2 weeks, 2 or 3 weeks, what's going to happen is they're going to start qualifying your business, make sure you're a legit business, then they'll direct deposit 10 grand to your bank account. 10 grand, that's magic helicopter money. And then they'll go through the loan process with you, determine what your loan balance can be. And again, it will help you. It's designed to help you cover your operations, your overhead costs, the rent for your pawn store, your payroll for your employees, the utilities, keep the lights on in your pawn shop, right? Those are the things that is designed that this loan program is designed to cover. So that's program number 1. That's called the EIDL, the Economic Injury Disaster Loan. To give you a little bit of context on the program itself, it was released about a week and a half ago. The first day it opened up, 15,000 people applied on that first day. It caused the website to crash. 2 days later, the SBA is like, okay, what are we going to do? They redesigned the website. Then they opened it back up again. Tens of thousands of people applied, caused the website to crash. They're on version 3 of the website. And right now, just to give you an idea of the volume of applications that are going into it, I applied for a client. I'm looking at the PDF right now. I applied for a client on Saturday. He was application 1730. I did an application for a client last night. He was application 458,000. I did one this morning and it was application 533,000. So in under half a week, I mean, we're on Thursday now, so a little bit over half a week, we already have more than 500,000 applications on version 3 of this website. Now, if any of you have applied for this EIDL loan prior to the streamlined process where you're asked for your direct deposit information, and if you want the $10,000 advance deposit, you need to reapply immediately. So even if you've submitted all of your docs to the previous version of the SBA website, you want to reapply in order for you to participate in this $10,000 advance program. Okay, so that is a caveat. I wanted to make sure that I gave that little piece of value out there because nobody's really talking about that right now. Because a lot of folks are like, I already applied for it. I'm in the system. I'm good to go. But if you want to participate in a $10,000 grant, you need to reapply in the new system, the version 3 of the website. So that's the EIDL program. So let's talk about the PPP because many of you aren't just running solo. Many of you are just, may have employees that work for you. So they released this one. It was passed in Congress, the Senate, and Trump signed off on it through what they call the CARES Act, C-A-R-E-S. And there's a nice piece of the bill, about $380 billion, that's allocated for small business owners like you and I. And the way that this one works is they look at your monthly payroll expense and they give you a 2.5 multiplier on that as what you can borrow from the federal government. So let's say, for example, let's just use round easy numbers. Let's say your payroll on a monthly basis is $50,000, including owner's salary. And I hope that any of you who are S corporations and are owners of your S corporations have your cell phone salary because you need to do that in order to be in compliance with being an S corp. But also this is a benefit for this PPP program. Let's say your payroll, including your own salary or you and your wife's salary or whatever your spouse's salary is $50,000 altogether on a monthly basis. Well, the federal government will allow you to borrow $125,000. So 2.5 times that monthly salary. Now you borrowed $125,000 from the federal government in order to help you operate your business. As long as you spend that proceeds from the loan on 3 specific categories, and you keep your payroll the same on June 31st or 8 weeks after funding, your loan principal balance is forgiven, which is crazy. Again, magic helicopter money from the sky, could cause inflation down the road. That's what the economist in me says. But as an entrepreneur, here's an opportunity for you to be able to cover your expenses and allow you to allocate your own resources differently to allow you to keep running your business and do the things you need to do with your family. So here are the 3 categories that you need to spend these loan proceeds on: payroll, rent or mortgage interest if you are financing the property that you're operating in, and your utilities. So those are the 3. You notice that in that, none of those expenses that you can use to allocate and get forgiven have anything to do with buying inventory or advertising or insurance or anything like that. Those are the only 3 categories. And this is the back end side of it. And yeah, Stan, I think I haven't seen the question, but I know what you're talking about. If you're making over $100,000 per year, you're capped out at that $100,000, then they annualize it and take the 1-month version of that. So that is a little caveat of that piece of it. But so here's how it works. You get funded by the SBA on this PPP program if you get approved. When you get funded, you have 8 weeks to spend that money. And the whole idea is to create velocity in the economy, to create velocity of spending that money in order to get the economy rolling again, right? On week 10, you have to submit an application to your lender, which they'll call the PPP validation report or the forgiveness report, where you have to validate and show where you had spent the money and that you had spent more or the same amount as what your loan balance was to get it entirely forgiven. So there's some back-end work on it that nobody is really talking about as well, and I wanted to share this little secret that I only tell my clients about with all of you. So Josh says that, can you repeat that again? When you get funded under the PPP program, and I'll explain how you apply for this one. When you get funded under the PPP program, you have 8 weeks to spend the money on those 3 categories: payroll, mortgage interest, or rent for your facility, and also utilities. Those are the only 3 categories you can use. You have 8 weeks to spend that money. 10 weeks in, 10 weeks after funding, you have to submit an application to your SBA lender to have that balance forgiven. And on that application, you're gonna have to list where you had spent the money and show that you had spent either the same amount or more than the loan balance in order to get that amount forgiven. I don't know if there's gonna be any waivers of timeline. Yes, all the money. And if you don't spend all the money, you only get the amount that you spent on those categories forgiven, which isn't really a bad deal either way, because you're looking at 3.75% interest, right? So let's say if you spend half the money on the rent, the payroll, the utilities and stuff like that, mortgage interest, forgot to add in the payroll, maybe it did. But if you spent only half of that, let's say you got a $50,000 loan and you only spent 25 grand on those particular categories, then 25 grand, the remaining half of that loan is not forgivable. But again, it's still at very low interest rates. But in order to take advantage of the forgiveness feature, you got to spend all the money on those categories, if that makes sense. So those are the 2 programs out there. What's really interesting is if you apply for the EIDL loan and then later you apply for the PPP loan, you can refinance the EIDL, that first loan, roll it into your PPP, and now that loan balance that was here that was not forgivable now can be forgivable, right? So there's some interesting caveats to it. Again, nobody knows about this. Nobody's talking about it. But according to the bill and according to the CARES Act, in a really small fine print part, you can refinance it and pop it into your PPP loan. So here are some of the challenges of the PPP loan. Both programs sound amazing. But here's the reality of the situation and why we need to look at doing this quicker and more proactively than later. The best analogy is, I don't know if you can relate, maybe you can, but let's say you're looking to buy Burning Man tickets. Right? You know how to buy Burning Man tickets, right? You put your name in the list and you're on this big old list. And then when it finally opens up, they just start going down the list and saying, hey, we got tickets. You want to buy? You got tickets. You want to buy it? You got tickets. You want to buy it? Same thing with these two programs. It's almost like a first come, first serve thing where you want to apply. The sooner you can apply, the better. Now, you could currently apply right now for the EIDL program. And Rachel, yes, you could apply for both loans. You could right now apply for the EIDL and get that taken care of today, right? You could apply for it. The PPP loan, underwriters still do not have documentation or language from the SBA yet on what they're underwriting for. They also don't know how the loans are going to be backed. They don't know how the loans are going to be forgiven because somebody's got to pay the bank that money in order to provide these loans, but also forgive it. So that hasn't happened yet. So what you want to do is you want to be prepared as possible. Get up to date with your books, get up to date with your tax returns because you need to be current with your tax returns. You can be an installment, you could owe money to the IRS as long as you're current with them in some type of installment agreement, then you'll be fine for these programs, right? But you want to have all of your ducks in order. So when these programs open up, the EIDL is open now, but when the PPP opens up, you have all of the documents you need to get that going for you. I see a screen share. Somebody's recovering their Dell
Oh,
computer.
yeah, hold on one second. Screen share. Hold on one second.
Awesome.
Okay, I'll turn
So
that
you
on.
want to have all your ducks in a row. Okay, so those are the programs. Now let me share the logistical challenges of both programs now and why you want to just prepare yourself for it. So right now the SBA, they're on version 3 of the website. They're already well past 500,000 applications for it. If you can understand right now the federal government, yes, we know that the federal government is this massive thing, right? But many of the branches are underfunded and understaffed. So like I said, I'm a tax geek, I'm a tax strategist. I've been calling the IRS, which is the federal government's revenue source. I've been calling them for the last week trying to get in touch with the professional line, not the consumer one, the professional line for a week for a client to help renegotiate a payment installment agreement. They haven't had a live operator on the IRS website. And again, this is where the federal government gets their money. They haven't had a live operator on this line for the last week. Now, think of the SBA. The SBA has been chronically underfunded. They have 500,000 applications. They have to assign each application to a loan officer to have a conversation with a small business owner on their application. And this is why you want to be prepared. Because imagine if you have a phone call that's scheduled 2 weeks or 3 weeks out with the SBA officer. You hop on the phone with the SBA officer and he's like, yeah, so what I'm going to need from you is I'm going to need your P&L. I'm going to need your statement of liabilities. I'm going to need your tax returns. I'm going to need your tax return transcript. Imagine you hop on the phone with this guy or gal and you say, okay, great. Can I call you back and grab that for you? And be like, yeah, we'll reschedule the appointment. The next appointment's in December, right? So this exemplifies the importance of having all of your ducks in a row, having all the documents needed. The PPP is a completely different animal. You can't apply for that online. That has to be done through an SBA banker, which is challenging because if you do Google search for the highest volume SBA lenders in the country in terms of their SBA 7A program, which is their flagship lending program, the biggest lender in the country, which is based out of North Carolina, did 792 applications last year. I don't know if those numbers make, if those numbers make you kind of like say, but you're looking at 792 loans as the biggest lender of the SBA, and now we're dealing with millions, if not tens of millions of entrepreneurs looking to apply for these programs. So a couple of things. If you are currently working with an SBA lender, if you have an SBA lender in your back pocket because you borrowed from them before, hound them about it and call them about it and say, hey, I want to be one of the first in line about this PPP program. Let me know when it's available. Call them up every day if this is something that you're interested in. I am actively spending 2 hours a day for my clients calling up SBA lenders to try to find a company that will lend on this. I found a couple, but all the companies are only going to lend $200,000 or more, which means you need a monthly payroll volume of 80 grand per month. And some of my clients fit that, the vast majority do not. And a lot of, if you're a solopreneur that's running a pawn shop and it's just you and 3 or 4 other employees, it's very doubtful that you're running 80 grand a month in payroll. So it's been a challenge for me that's, professionally connected to find these lenders to be able to do it. And I'm actively spending at least 2 hours a day researching, calling, to try to find it for my clients. So that is a logistical challenge for the PPP program. So if you do have an existing SBA relationship, I highly recommend calling them every day for it. So those are the two programs. I wanted to share them with you. If you haven't applied for the EIDL program in the newest capacity, the newest format, where the website asks you for your direct deposit information and asks you if you want the $10,000 advance, reapply immediately. Me and my team are more than happy to help walk you through whatever the process is. We also help our clients do the document preparation and all that stuff, just to walk them through the process. But at the end of the day, like, my objective is to help as many business owners as I can by educating about these resources and getting them through the process. Because as you see, it's like first come, first serve. The sooner you could get doing, or the sooner you could take action on this, the better off you'd be. So I see a couple of questions. Can you use, okay, how do I know if I applied for the new version 3 of the EIDL loan? If on the website it asks you for your bank account routing number and account number, that's version 3. And the website URL begins with COVID-19. I don't remember the exact the website, but the website URL, it wasn't sba.gov. It was covid19.sba.gov or something like that. So that's version 3 right now. Can you use the money to prepay rent? That one is a question that I probably can't answer because I'm not the lender side of it. But if you could show that it was rent and it's your normal amount of rent that you'd be paying, then I would assume so. Here's like a little workaround around the whole idea of needing to spend the money in 8 months. If you are an S Corp, which I highly recommend most small businesses to be, if you're an S Corporation and you yourself are on salary and you're struggling to spend that 20, 30 grand, whatever, just jack up your salary for the month to bring it up to that cap of $100,000. Bring your spouse or your partner on salary and jack their salary up to $100,000 per year, right? That will help you burn through that cash faster, so that way you could meet that forgiveness metric. Okay, okay. On the Chamber of Commerce brochure, talks about payments deferred for 6 months and a fixed rate of 0.5% fixed interest rate. Loan is due in 2 years. Is that loan rate is a higher? So the Chamber of Commerce brochure is kind of true, but it's not fully fleshed out. So yeah, when you apply for both of the programs, EIDL and PPP, you have the option and the ability to defer your payments. And there is an interest rate that's associated with like the deferment of the payments. But the loans itself, the way that they're structured is the loan, the principal balance of the loan is at 3.75% because they cannot charge more than 4%. So they max at 3.75, and it's over a period of either 10 or 15 years, depending on the conversation with the loan officer. And obviously, if you get a longer term loan, the better, because it will be a lower payment, less of an impactor on your business cash flow. Okay, can you give personal raises to qualify for spending percentage? Yeah, you sure can. And early pay penalties for either loan. There's no early payment penalties for either one, which is great because this is, so here's the way that I look at it. And this is just, again, this is what I've been telling my clients. This is not what I tell the general public. When you look at these loans, you may be in a strong financial position right now with your business. Awesome. We don't know how long this recession is going to last. The federal government is doing these loans with a 250% uprider, assuming that the recession is going to last 2.5 months. Now, I know when I was in 2001 and 2008, these are one-time events that impacted a very specialized industry, and it took 3 months just for that for us to start clawing back out of recession. We're dealing with a black swan event that affects all industries all across the board, all across the world. This, at least in my eyes, at the very minimum, we're looking at 6 to 8 months for us to start clawing back out of this challenge. Even if you're financially strong right now, I highly recommend applying for both of these programs and treating the loan balances as an insurance policy, as a cash insurance policy. Because there is no prepayment penalty, because it's a very low interest rate, and because effectively they're giving like magic helicopter money out of the sky. Think of it this way. If you borrowed 50 grand from the federal government through an SBA program and you didn't need it in 8 months, how much interest did you carry, right? Let's say it was $100,000 for easy numbers at 3.75%, right? $37.50 of interest for the year. And let's say you carried it for 8 months. You held on to the federal government's $100,000 at a cost of less than $4 grand for that year. And if you didn't need it, you just repay off that loan. and you basically had an insurance policy to hold on to 100 grand of the federal government's money, which is super unique. Now, if you did need the money, you had that accessible. We're in a unique situation where you want to be as cash strong as possible, as liquid as possible. Anything that's going to be tying up your assets, anything that's going to be tying up your accessibility to cash is going to be an impactor in your business, right? So those are things that you want to be thinking of and considering outside of the fact, because a lot of folks are like, I don't want to hold on to debt. I don't want to take on a loan from somebody. I'm like, look at it from a different perspective as a business owner. Now that you have accessible cash, it's like an insurance policy that you're holding on to.
Plus, Eric, just to jump in real quick, the excessive cash in the long run for the pawnbrokers, there's going to be a lot more pawns coming in. They're going to need that excessive cash to be able to lend out when people need money because all of that government money has been spent.
100%. And that's exactly right. I mean, just look at the macroeconomics of it all, right? The federal government is giving people a one-time payment of $1,200. Now, if you live in Mississippi or you live in Kentucky, $1,200 can go far. I live in Orange County, California. $1,200 covers about a week and a half of the rent of the condo that I'm living in, right? That doesn't go far. And a lot of people have built up assets in terms of stuff inside their house that they are probably starting to think of like, I don't need this. I don't need this. How do I get money right now to pay the bills? I need to feed my kids. And that's going to cause a lot of folks to go into pawn shops to sell or pawn up assets. And now you as the business owner, if you have the liquid cash and the ability to loan it out and you're paying 3.75 and you're charging whatever the rate is, that arbitrage, that spread is going to be beneficial for you, right? It's just from a business perspective. Think about it.
Yeah.
Okay, Brian is asking, can you pay additional principal property loans to qualify towards spending? So on property loans, it's based on the interest. So you're going to have to break out the interest from that mortgage interest on your property. So it's not based on principal. So that's a great question, Brian. Richard asked, for the last 4 941s, medical 1099 employees, the PPP is at 0.05%. That's not correct. The PPP is at 3.75%. It's if you elect to defer the payment, the first payment, or the first 6 payments, those payments are held in a separate bucket where you're charged 0.5%. But the full note itself is at 3.75%. If last 4 941s from it, like for me as a tax geek, I know what that is. So 941s are your quarterly employment tax reports to the IRS. So basically the way it works is if you've been in business prior to 2018, you could look at your top or your peak payroll period in 2019 as your metric for what they do the multiplier on. If you were in business and you just started in 2019, then they just look at 2020's first quarter payroll or the first month of payroll. So you might have been in a situation where in 2019, you had a spike in payroll because, I don't know, a lot of people were coming in to sell their stuff. And you could use that as the metric for the multiplier for the loan itself. 1099 employees, what do they need? 1099 employees are, right now, it's written in the bill that 1099 employees are added to the payroll itself as long as they're on contract. Basically, the way that they're probably going to calculate it. And again, I'm saying probably because, again, I'm a tax CFO ninja. I'm not the financial guy. I've stepped into this role to help assist clients. So I'm going to tell you from what I've read and what I understood. So take everything I say with a grain of salt and do your own research. But the way that I believe they're going to calculate 1099 employees is they're going to look at what you pay them for the entire year. Because, you know, contractors, their income or how much you pay them can fluctuate depending on when you need them. So they're probably going to look at an annualized amount of what they paid or what you paid them as a 1099 contractor and divide it by 12 to use that as the additional part of your payroll. If that makes sense. Have I heard about phase 2 of the PPP, if anything? Look, Brian, that's a great question. There can be more stimulus packages down the way, but it all comes down to the will of Washington. Now, we had the CARE Act passed relatively quickly because the administration saw the market was taking a nosedive, unemployment was going up, and Trump wanted to get a bill passed as soon as possible, got the Senate going, and on a bipartisan basis, and I'm non-political, I'm a libertarian at heart, like I don't care really about conservative, liberal, whatever, like that's not my thing, like that's not what I really care about. I care about like taxpayers like you and I. But when you look at how the bill was passed, they're able to push it through on a bipartisan basis because there's an urgent need at that point. But now we're back to, again, to a bipartisanship in Washington where they're just like tearing at each other. And so for additional bills to go through, could take additional time, and I can't guarantee it. I know it's passed and I can explain what's passed, but to speculate on what Congress or Senate's going to pass or Trump is going to pass in the future is something that if I could tell the future, shoot, I'd probably buy a lottery ticket and I'd be calling you off from like Hawaii right now. So I can't tell the future on that one. I got a lot of great, you guys have some great questions. You got a great group here. Some really smart questions here.
I'm glad they're on here.
Do you know if these loans are available to a new business, just purchase an existing shop? You have to have revenue, or you've had to have purchased it prior to January 31st of 2020, because that's the metric number that they're looking for. What specifically qualifies as utility, electric, water, sewer, natural gas, and garbage. Right now, those are what qualify as utilities. Internet service as well, telephone service as well, electric, water, sewer, natural gas, oil, garbage, telephone, internet. What if you're not currently employing everyone from last year because of restructuring? That's a great question. So if you applied for the PPP loan program and you had, so I have clients that are in the personal fitness gym space. They had like large boot camps where they had, 10 or 11 employees, and they either had to furlough them or close it down and lay people off because obviously nobody can go into the gym anymore right now. So the way that the PPP is designed is they're going to look at your first quarter of the year or first month of the year. They're not going to penalize you for letting go of employees, but as part of the application, you may want to rehire those employees to get your payroll where it needs to be to qualify for the loan that you want. So you may pull them off of furlough, or you might say, hey, I had to lay these folks off because of the pandemic. How can I allow myself to qualify for a larger amount? Well, you're going to have to keep these people on payroll. You're going to have to rehire these people. So there might be some wiggle when it comes to figuring out what you qualify for, and you might have to rehire folks. Let's see. Highest quarter in 2019 can be used as a multiplier, not the average of 2019. So highest pay, it will be like the highest pay cycle of, not highest pay cycle, the highest monthly payroll of 2019 if you were operational prior to 2019. Where do you get a high 941 from? I read all four from 2019. So the 941 forms are just what the SBA is going to be looking at to just validate that you did pay the employment tax, and then they're going to look at your payroll tax register. You're going to basically, to apply and be prepared for it, you're going to need your federal tax returns, obviously, but you're also going to want to have an organization chart, and then you're also going to want to have the payroll reports that you want to base your lending on. So you may want to do the homework and print out each individual month of your payroll from ADP, Gusto, Paychecks, whoever you use, Heartland for your payroll, and determine, okay, which month is the highest cycle, and then just hold on to that report, make it a PDF. And then so when you hop on the phone with a loan officer or with a PPP loan officer, you could say, here's my highest pay cycle month. This is what I want to qualify for. Just so you know, for reference, this is what my 2020 month one was, and we're going to pick and choose which one we're going to get a loan based on. Jonathan, can you use the 2019 figures for EIDL loan, or do you have to use February 19th to January 20th? So that's a really good question. So the EIDL loan is a combination of just more of like looking at your expenses. But when you apply, they want to look at your revenue from January 31st of 2019 to January 31st of 2020. So it's not year to date. It's not like calendar year. It's January 31st to January 31st. So those are the way that the figures are going to operate in terms of the EIDL loan. Gross sales or net sales need to be 50% of income. And I'm assuming that's with regards to the interest question.
Yeah.
That one, it doesn't specifically say. So actually one of the gentlemen from your awesome group had sent me a message on Facebook earlier about it. And I screenshotted the exact wording from the CARES Act, and it just says can't be deriving more than 50% of income. It doesn't say net or gross, but can't be deriving more than 50% of the income from interest.
So from just really quickly, I'm not an expert. Don't take this. When we applied for an SBA loan to buy a piece of property, it was gross at the time. So that's all I know. That was, I don't know, 10 years ago. Things could have changed, but I believe it's gross. So, but don't quote me on that.
Yeah. Good insight on that one. And the last one, do you have to have 2019 federal tax form done and filed? Not necessarily, because a lot of folks are in extension. Shoot, half of my clients are on extension right now on the corporate side of things, because everything just like the whole sky fell apart like as corporate tax filing season was rolling out and coming due. You have to have your P&Ls though. As long as you can show that you're current, meaning that you have an active extension on your 2019 federal business tax return, you'll be fine. And also the SBA understands that personal tax returns are extended to July 15th. So there shouldn't be any problem with that at all because everyone already got an automatic extension.
Awesome. Dude, Eric, this has been amazing. If you guys found this valuable, write yes in the chat so that Eric can see that. Brother, thank you so much for this. And then once we get those going, I'm going to do one more thing for you real quick. Hold on. As we got this yes coming in. Also, I want to give Eric what I call a Zoom round of applause. So just write an A for a round of applause for Eric. So you can see that you appreciate him being here. So
Love it. Thank you.
coming in, brother. Also, if you want to talk to Eric, reach out to him. This is his business. Respect his time. If you want to hire him, hire him. Don't just send him 50,000 messages asking him 80,000 questions. It's just not fair to him. So if you do want to reach out to him, you can find him on Facebook. Or what's the best way that people can find you, Eric?
Right now, Facebook is the best way for me to be able to manage the influx of inquiries. My text has been blowing up, and Facebook's probably the best way. Let me see if I can link my profile here for you guys and gals.
And the reason I brought Eric in is because I trust him. I know he's a smart dude. He really, really knows his stuff. So
that's
cool.
A gigantic link right there. But feel free to reach out to me, shoot me a Facebook message. More than happy to help you out with this process. At the end of the day, like my mission right now is, like I said, like my tax business has been impacted revenue-wise, and I've been fortunate enough to be able to be financially responsible to save a couple months of rainy day fund. So I've really pivoted my business to try and just help as many businesses as I can, because I firmly believe that entrepreneurs are really the only force that can really change and improve this world. The federal government can't do it. Nonprofits are really limited in capability, and a lot of the folks I work with, I help them sculpt their business so that way they can also provide back to charity or the impact that they want to make in the world while making a lot more profit. And that's like my main objective, is to help everyone just make a bigger impact and make a lot more money.